Good evening, Nick Inman from VolumeProfileTrader.com on Tuesday, August 14th. Looks like the market may have found a temporary top, and the only reason I say that is because the way it closed today is different than what has happened the last week or so. And I wouldn't put too much emphasis into this. However, one thing, and I have to say this to be honest, the value area level doesn't seem to be accurate on Thinkorswim. It tends to be off a little bit, which basically the goal of the value area is to hold about 70% of the volume, give you that bracket, and it's good to use as a support resistance level. Well, basically this value area line up here at 1409 or so, that's basically saying that's the upper end of the 70% range. I do think it's a little lower than that, the true value area. It's probably more towards 1400. So, not a big 10 points off, but, it's off by a little bit. And I'm just guesstimating here, by the way. But Thinkorswim's is 1410, and we'll go with it. But one thing you see is a little bit of a reversal off of those levels. And that should result in a little more selling into strength mentality. And the only way it doesn't is looking at what is happening. We do have, a little uptrending channel here. What you'd want to see is basically tomorrow a push up towards 1410 again. If it makes new highs and then closes decently stronger, then you may have something to look forward to as far as more upside. However, just looking at this chart right here, we have up, down, up, down, up, down, up. The only difference this time is we've had a lot of, we had one day up and then a lot of steady, buying the weakness that worked. Today was the only day that we've closed weaker on the day, and I want to show you the intraday chart as I bring it over. So each one of these is one day, and what I want to point out, and I'm actually going to do a time-based chart. What I want to point out is the S&P, you can see it established value today, call it between 1403 and 1405. This is a really small guesstimation. I'm not really too concerned about that. What I'm more concerned about is the point of control around 1403.75, 1404. Towards the end of the day, that was resistance. Market players were selling into that strength, and it led to a sell-off to the downside. Basically, we got down to this high volume area here. This is Friday's point of control down to yesterday's point of control. That general range is support right now in the ES. We actually had a pretty nice bounce at the end of the day. But the point is, this is resistance right now. 1404 or so, we sold off from it today, towards the end of the day, and I think you just use it as a reference level. If the market can't push back above that level, then you may start seeing a little more selling pressure come into the market. Another thing, and this is, I wouldn't put too much emphasis onto this, but the value area for the last 5 days, I think it's 5 days. Yeah, last 5 days, you're seeing some selling there, and then today's value area, you're seeing some selling. It's also basically yesterday's highs of the day. So just keep that in mind, that you could see a little bit of selling pressure come into the market here. Just to show you, NASDAQ, this is up at this resistance level. The last time price was up here on the NASDAQ, was it right to be a buyer or seller? It was right to be a seller. So just respect that, and also respect this little channel here. And this channel, every time it came into this sell zone, where did it revert to? Back to this trend line down here. So just be aware of that. I'm not saying it's going to happen, but if we do catch a sell-off here, just looking at the monthly, if we break this, here, let's do it on the hourly chart. Actually, that's pretty interesting. I just noticed point of control shift here for this 90-day chart. It's actually 180. I'm going to bring it down to 90. And what I'm looking at here is this balance range. This is your first support zone, potential support zone. Your job as a trader is to see a longer term trader, like 3 to 5 days or more. You want to see how this reacts down in this zone. So if we make a higher low here and then push back up towards these highs and maybe make new highs, then this was just a buy the weakness. However, I just think it's right to be careful, and I don't think there's any reason to get overly excited about the market. We are at levels where it's been right to be a seller in the past, and I just want you to be careful. Don't be afraid to put on some short positions. Become a little more market neutral. I know I had stuff to do earlier this morning. I took the time when I got back in the afternoon to really assess my portfolio, look to scale down on things, take some profits, because the last thing I want, I'm less worried about the market continuing higher over the next, say the end of this week. I think the risk is to the downside. I think there's the potential for the market to come in 1 or 2%, maybe even more. You never know. But the point is, you don't want to be given these price levels to take some profits, to take some risk off the table, and not take advantage of that. So, for example, I guess I'll just keep it on the hourly chart. That's not that big of a deal. Apple. I'm not saying that Apple's done going up, but what I'm saying is, this was kind of, right here, right now, this was a little bit of a blow off top. I'm not, last time we got that, what did we get? Multiple days of sideways consolidation. I'm not saying that won't happen again, but what I'm saying is I would hate for Apple to revert to, trade another $10 down and me not taking profits above 630. And so that's what I did today. I took more off on Apple. Now I just have a small position, and I'm okay with that. I'm still participating, but I realize that the chances for a pullback are decent, and I need to be aware of that because that's how I want to assess my portfolio. Bristol Myers, I just want to point out it's down to these levels that we saw at the end of last year. Looks like we're closing or in the process of closing some decent gaps maybe. We're down at this big selling tail here. It has held so far. But what I want you to see is, let's see. Okay, I know this is, you have 1, 2, 3, 4, 5, 6, 7 down days. Your first up day, you have a higher low here and a higher high on good volume. Just be aware of that. You could see a snapback. Just looking at this monthly profile right here, you could see 3250 pretty easy on Bristol Myers. That's not a bad shot. Say you're risking is trading 73 right now. The low, we'll go with the low yesterday, 48. So give yourself 30 cents of downside, 1% to make 70 cents or so on the upside. That's not too bad. 2-to-1 risk reward. I think you can deal with that. And I think this is something that you can look at for a potential trade. I also wouldn't take out the opportunity that this could trade back up to 34. I realize this is a slow mover, but it's also paying you 4% on dividend. And I'm not saying you buy it just for the dividend, but let's say this takes 1 quarter to move up to 34. In the meantime, you'll collect a dividend, so you'll collect 1% on top of the $3 or so, $2.50 you make after only risking 30 cents. So basically, that dividend will be your protection, and you're just looking for upside. Now, if it drops below these levels, you can go ahead and take your loss and move on. My cost basis is right around here. It's actually a little bit higher. It's $31.79, I think, is the exact price. Plus, I sold some puts onto this too, so I'm involved. And I also own some downside puts, so I'm not just naked short puts. I'm not just naked a bunch of shares of Bristol Myers. Rather, I am hedging my risk by being long some downside puts being short some at the money puts, and being long shares right around these levels. All right, let's see what else we have to cover. ConocoPhillips. I didn't really write anything in my notes here, but it is at this resistance zone. Reminds me a little bit, and there's no coordination here, but NASDAQ up at the top. That's kind of what ConocoPhillips looks like. It's also at the value area high for the year. This point of control for the month of April, it looks like. Resistance also. I'm not saying it will be resistance. I'm not saying that ConocoPhillips isn't a buy the dip. I think it is. Gets down to 55, half or so. You definitely look for the buyers to step in and bring this thing back up. If that's the case, then you want to continue to ride this trend. I've really talked about this name for a while. It's just a name that I kind of own, and I like to sell upside calls against it. And, if I get called away, I'll look to buy the weakness, and into strength, I'll do it again. All right, Dow Chemical. First things first, light volume down here. And, that's not good for buyers or sellers. However, I did take a shot on Dow Chemical to the long side today. The reason being is because I do think it's a little bit of a cheap shot. You may see a little more upside in Dow. I'm looking for actually 32 or so on the upside, and that's by September. So I have about 38 days to get that trade to work. And what I did and I'm looking at last month here, last month's value area, and on top of that, it is the top of this high volume area here from last month. I'm looking for Dow to make this higher low here and show us the first bit of strength and a potential reversal. So what I'm risking is, I place my stop around 40 cents or so lower than current prices. And what I'm looking for is I'm looking for Dow, and it's already traded in this high volume area here. And it was, value for a couple of days, and then the sellers brought it back down. However, we see a higher low, and we also see, qualified volume to take along. And I think that's important to be aware of. So the first thing you're looking for Dow to do is to punch through this high volume area here and trade up towards 30.25. You want to see it get as close to these monthly highs as you can. It's also the point of control for last month. And what you really want to see is it to break through and close above that level. If it does that, that is a sign of strength. That should tell you that you want to continue to hold this name. But basically what I did was I bought the 30 calls expiring in September, and I sold the 32 calls against that. And the position cost me 60 cents per spread, and what it does give me is 60 cents. I have a chance to triple my money and then some by September. I just need this higher low to work out, and to see some relative strength, to see Dow start to outperform to the upside in the next 38 days. So I have a decent time horizon. We'll see if it does it. I'm okay if obviously it doesn't. I wouldn't have put on this trade if it didn't. But one thing to say is it traded up, and basically we've had with a downward bias, no doubt about it, a long, balancing period. So what I want to see is to this trade back up to these moving averages see if we get any more strength, push it up towards 32. That's a start, and we'll just have to wait and see. All right, enough of Dow. Let's move on to Freeport, which this trade's working, and this is what we want to see. This is what we want to be a part of. What we did, announced this yesterday on Twitter, 36 by 34 put spreads expiring in September also. So we need Freeport to trade down to 34. The cost of these, I think I paid 75 cents for them, and they're up 20 cents or so right now per spread. So the reward right now is so far Well, let's do the math. Call it 26% returns, just over that. Not too bad in one day's work, right? So respect that. Put your stop at break even. Don't let this come back in your face. There's no reason to take a loss now that it's up 26%. What you want to see is more follow through to the downside. I kind of highlighted the next stop that Freeport should make to the downside. You know, we could hold these levels here. We could. But I also see the potential to trade down to 34. Last month's value area high. You can see it's the top of this high volume area. We have volume here from this current month, August. So we could easily see a snapback down sub 34.50 when we get down there. Be prepared to take some profits. The trend is up right here, right now. The longer term trend. We have two higher lows, and we definitely have a higher high here. So we're playing a big counter trend, and into this buy zone, or this potential buy zone, you want to see, are the buyers there? And if it's still weak, and when I mean weak, I mean like how it was yesterday, where the buyers weren't really coming in, then let it ride. Let it continue doing what it's doing. Notice on the way up, you had big up bars. Then all of a sudden, you get basically a failed test, and then a lower high, big down bar on solid volume. Take that, and that is a good trade, especially when it's basically at levels for the last 4 months, 5 months, 4 months. The last times it's been anywhere near these levels, was it right to be a buyer or seller? It was right to be a seller. Respect that. This could still be range bound. It still could trade down towards 34. That's what we want. But think about it. If it takes another 50 cents to the downside, which is basically this profit zone here, that spread will probably be worth another 10 to 15 cents, which means we basically hit 50% returns on a spread in basically 1 week. We don't know when that will happen. But let's say it happens tomorrow, just to make it easy. 50% in 2 days, you can definitely take that. And that's an easy one to pat yourself on the back for. Say, good trade. Thank you, Mr. Market. Let's move on. And, let's do just that. Gold, I mentioned yesterday via Twitter. Protect yourself from the long side in gold. There is no reason for this to come back in your face. Reason why? What happened the last 4 or 5 times price got into this basically above 615? It was right to be a seller every time. And here we go again, double top basically for the month. And then you got decent, not great, but decent selling coming in. Here we go again, back down to levels where it was right to be a buyer. So realize that, respect it. The longer term gold trend, we have a double top right here. But what you want to see is, do these higher lows hold? If they don't, you'll be sure as glad you're hedged to the downside. If they do, then your hedge, you'll probably take a small loss or whatever. But if we break above these levels, we should have a decent push to the upside. I mean, 1670 is more than reasonable to the upside. It's just the top of this high volume area here. But what you'd really want to see is for this downtrend, this sideways consolidation, and I'm talking about over the last year, to be over, and you see a breakout, a breakthrough on gold to the upside. So right now you're glad that you're protected, but you realize the potential for an upside breakout is there, and you want to be a part of it if you can. Just to show you, it looks like this is a 2-year chart or so of gold. This 16, basically where we're having resistance right now, is major selling. If we break through this, this is, I would honestly have to say this is an all clear for gold to the long side. What I would do if this is the case, I would look at strikes on GLD. How can I get exposure to the long side on GLD? And I see that this is different, but don't worry about that. Let me go back down to a daily. So what I'd be looking for on GLD, 160 or so seems reasonable, right? Why don't you buy it as long as we get a reversal here? Why don't you buy GLD maybe 150? Let's see, trading 155 right now. So like 157 by 160, 161. You know, a $4 or so, maybe a $5 call spread. That way you're mitigating risk by selling an upside call. You're giving up potential gains, but at the same time, you're probably going to get 300% returns on that trade. So manage your risk dollar wise, and you should be okay. Really, I guess the last thing, euro didn't do too much. Dollar didn't do too much. However, the dollar is holding right here decently, so it kind of shows me that a pullback may be likely. If we start to make a higher low, higher high scenario here, maybe you get some more buying into the dollar. One thing just to mention is, this is still, you still look for the sellers into 82, 85 or so. And if that's the case, then you kind of want to go with that, because this current trend is down until it's no longer down, and you'll know that because it'll break this downtrend and start moving higher. But right now, we have a topping pattern here. Back at 83.50 or so, the retest was a complete failure. Now we have a lower high. Now we have a higher low here. But if we zoom in, the buying was decent. So we'll just leave it at that. I'm gonna say, obviously we went over today that you look for a pullback maybe on the S&P. That's why we're long Freeport put spreads, and we'll see how that goes. Also, I did take more off on my SPY position, and that's just the way I want to play this right now. I want to raise a little bit of cash and I want to speculate a little bit to the downside because I want to, realize that there's probably going to be a pullback, and it's just not really clear right now. So I hope this helps. Really, I hope you're trading well. I hope I'm giving you good levels to trade off of. I hope I'm giving you, solid trades. I feel like I am, but we'll just have to wait and see. I know it's not the easiest to catch, every trade, and the most frustrating thing is, if I recommend a trade and it's, one of the few trades you do take, and let's say it doesn't work out, because that's what happens. Not every trade works. All of a sudden you're batting zero on my, recommendations. But, say the last 5 I did were, 3 out of 5 or 4 out of 5 were winners. It's just sometimes how it goes. So basically study these, the winners that do occur, see how, they develop, and then muscle memory, realize the setup, become an expert at it, and you'll be able to make money for a long time. So take care, have a good night, and I'll talk to you tomorrow.